Have you ever wondered how the stock market works? What makes those numbers on the screens of stockbrokers rise and fall? Well, today we're going to explore this intricate world of shares and investments. Picture this. The stock market is like a colossal, worldwide supermarket, but instead of buying milk and bread, you're buying pieces of companies. These pieces are what we call stocks, or shares. When a company decides to go public, it sells parts of its ownership to the public in the form of these shares through a process known as an initial public offering, or IPO. This way, the company can raise money for its expansion, new projects, or to pay off debt. Now imagine you've bought a share of a company. This means you own a tiny fraction of that company. If the company performs well, the value of your share increases. On the other hand, if the company doesn't do so well, the value of your share decreases. This rise and fall in the value of shares is what creates the dynamic, ever-changing landscape of the stock market. Shares are bought and sold on exchanges such as the New York Stock Exchange or the Nasdaq. The prices fluctuate based on supply and demand. If more people want to buy a stock, demand, then sell it, supply, then the price moves up. Conversely, if more people wanted to sell a stock than buy it, there would be greater supply than demand, and the price would fall. But what influences this demand and supply? A multitude of factors. Company performance, economic indicators, geopolitical events, and even investor sentiment can affect the stock market. For instance, if a company announces higher than expected profits, its share price might rise as more investors want a piece of the profitable pie. Similarly, if there's political instability or an economic downturn, investors might sell their shares, fearing a decrease in value, which can cause stock prices to fall. In essence, the stock market is a platform that allows companies to raise capital and gives investors the opportunity to own a piece of these companies and potentially grow their wealth. It's a complex, interconnected ecosystem where the tiniest ripple can cause waves of change. To sum up, the stock market works by facilitating the buying and selling of company shares. The value of these shares rises and falls based on company performance and various economic and geopolitical factors. This constant fluctuation creates opportunities for investors to potentially make a profit or, unfortunately, incur losses. It's a crucial component of the global economy, supporting companies in raising capital and offering investors a platform to grow their wealth.